Hello, and welcome to another update video about Ethereum. So Ether rallied into resistance, into the small micro resistance area we talked about yesterday, and we've already seen a small reaction to the 50% fib level. We're going to talk about that in a minute. Overall, bigger picture, Ether has followed through nicely on the overall yellow wave count projection, which has been the preferred wave count, which basically forecasted an impulse to the downside. We are halfway through, which means that we had our 1-2 setup here. Yeah, 1, 2. This could now be a third wave in the making. Then we get a fourth wave and a fifth wave. As always, trading a fourth and a fifth wave is not a good spot. So it's not a good spot to trade here, in my opinion. That would have been the 1-2 setup. We talked about a resistance area here. Just because now we are, even though we have a micro resistance area, things are going to start to get choppy if we break above 1595, because that would invalidate the more immediate downside impulse and could unlock more of the choppy price action. I do not see, and I looked at it, I do not see a clearly, immediately evident bullish alternative anymore. It has been invalidated. It was only the alternative anyway, but I don't see one right now. I would need more price action. There's nothing that is immediately evident. Of course, anything can happen, but it currently doesn't give us a clear pathway for a bullish scenario, okay? The current price action tells me that our overall forecast has been sort of correct, in that we said that most likely, at least a lasting low hasn't been established yet, or at least that we don't have evidence for it yet. We can see that because the move up was clearly just in 3 waves, yeah? And I've seen some people count this as a 1-2 setup. Now that's clearly invalidated now. I didn't do that intentionally because the second wave one is far too large. I did answer a few questions about that. That would be easily invalidated. Makes it very clear why we don't want to get too bullish too early. Often those counts are wishful thinking, because counting a 1-2 setup here, while that would be possible, again, the second wave one was far too long and also not clearly impulsive. So we don't want to get too bullish too early. And also we always need to consider, and that's more important than anything, we don't want to miss out on analyzing the context. Context is so much more important than just trying to count the microstructures. So from that point of view, we had an alternative, a bullish one, but it would only, it would only become the primary above 1726. So at the moment it's following through on the downside pathway, which was the preferred one. And ideally it would take us next to around about 1530, and then 1450, and then maybe even lower. Now, okay, if that is going to happen in a straight line or not, that's the question. If we stay below 1595, we should see a break to 1530 next, and then 1453. I'm a bit skeptical if we stay below 1595, because the price tested that level already. And a break above that level would make this immediate downside impulse very unlikely. It would not invalidate downside, but it would make it less clear, because we ideally always look for impulses. The clear parameters that define an impulse here are basically 1595 resistance. So that's the level I gave you yesterday here. And it respected that and it reacted to that, but it's come quite high. So if it breaks above that level, then the next level to watch is sort of 1614, which is here the wave 1 low. And then up there, resistance at 1640. I would not be surprised to see more choppy price action. Yeah, we are now in support again. We're very close to the previous levels, 1530, that Ether the bears just couldn't push through last time, okay? They just couldn't. So you need to understand that even though we have an ideal wave count here, obviously the ideal spot to go short was this 1-2 setup, as it always is, with a third wave to the downside. As we're already in the middle of a third wave, is typically not the ideal spot anymore to go short, unless you have your risk management spot on, especially as we're now, approaching a key support area. That's very important to understand. So that increases the risk of more choppy price action. Nothing's stopping the price to do this. Okay. Absolutely nothing. What we use the microstructures for is to understand when the parameters are broken, and that is when your risk management 101 comes into play, okay? But ideally, as long as we stay below 1595, the roadmap as it is on the chart will remain valid, okay? And we should follow through to the downside to 1530, then should get another fourth wave bounce and follow through to the downside. A break above 1595, as I said, will likely send us to that next resistance level at 1640, and a break above that, yeah, that will definitely lead to more choppy price action. And by that time, we can probably put another bullish alternative onto the chart. But again, it's not very evident at the moment. Yeah, it's very hard to say because this is clearly 3 waves. So, and this came down too low to be a reliable bullish structure. So I'll keep you posted. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. As a channel member, you get access to the weekly live streams. Every Sunday we do them. You get access to Discord and Telegram, the chat rooms, as well as a lot of educational content. And as a gold member, you get access to signals and short-term market updates. Thanks a lot for watching. Bye-bye.